Getting live at 12:05. Okay, it's being live streamed. What is going on, Eric? Woohoo!
Houses today.
Awesome sauce. I just love doing these with you. And thank you so much for always being proactive. I love it when you text me and you're like, when are we going live again? I got this product. I want to talk about it. I'm like, cool. So how are you doing? You made a change. So tell everybody, first of all, introduce yourself. Tell everybody where you are. And I'm excited about your recent move.
Are you talking about my company or where I live?
Oh, let's do your company.
And I am working with Atlantic Coast Mortgage. I am back with them after over 20 years.
Mhm.
And I could not be more excited technologically and product wise. It is the most exciting company I have ever been associated with in 37 years of mortgage banking.
Mm-hmm. Yep. I'm excited for you because, I'm a little bit of a techie as well. And, when you call me and show me the stuff that they have and what they're offering, I'm like, oh my God, this is so good. So one of the things, so you reached out to me and you said, hey, we need to tell people about buy downs. So I feel like the best way to introduce this topic is to talk about a little bit about pricing, because the market, we're supposedly in a recession, kind of, sort of. But if you are in the market to buy a home in the next 3 to 6 months, and you've been kind of on the sidelines, kind of looking, you're not exactly seeing a drastic reduction in sales prices. We are seeing a lot of listings do price reductions, but there's no slashing, like what we saw in 2008, in the last recession. So a lot of buyers are still curious and they're wondering, how in the world is it possible for me to still buy a house now, but keep my mortgage payment reasonable if the rates aren't where they were back in January? So that's where you come in.
And this is a neat idea. It's more of a strategy than a product because it's attached to conforming Freddie Mac and Fannie Mae loans.
Mm-hmm.
But the whole idea is to try and create a win-win situation where the seller doesn't have to worry about the potential of losing money on their property or having less of a having less money when it's all over.
Right.
And the buyer benefits from this because they have a lower payment either for the first couple of years of the loan, or we can do it another way and make sure that they have a lower payment for the life of their loan. So there's
Right.
two different ways that we can set this up.
Right.
And
So
that's the beauty of it.
Well, and you sent a worksheet, and let me just share, because I love telling people, let me show you how this works. So we have a listing in Alexandria. This is our listing at 8530 Monticello Avenue. And right now, Eric, the sales price is $799. And the original, I forget what the original list price was, but it was over 800. And right now the price is $799. So let me zoom in a little bit. So this is what you emailed me, and I saw it and I was like, OMG, this is amazing. Okay, can you see that?
It's a neat concept because you'll see in the upper left-hand corner where it says sales price $799.
Mm-hmm.
And what we don't want to do is come off that number.
Right.
People get so caught up in the fact that, oh God, if I need to get money taken off the house so that I can have a lower payment.
Right.
But what we're going to show you today is list price can still get you a lower payment.
Right.
It's the beauty of this whole situation. So if you look on the four columns that are being compared there, what you'll see is sales price $799.
Right.
And then next to it, let's say that the seller decides that they want to reduce the price on the house $25,000.
Okay.
$774. Well, they can do that. But if you go down, you're going to see that the the payment in the green to drop $110 a month.
Right.
Okay, that's for the seller netting $25,000 less than they would normally.
Right.
But if we go to the next column over, you're going to see if instead of reducing the price, the seller pays 2 points,
Okay. And in this case,
$12,784. Look at what happens to the price reduction.
right.
And here's where it all pays off. We can save you $338 a month on a fixed rate, or with the 2-1 buy down, we can start your loan for the exact same amount of money at 3.375. You would be at 4.375 for the second year, and then at 5.375 for the remainder of the balance of the loan. But
Okay.
you're going to save $12,784 for the first 2 years of the loan. It's a great way to get people into a house because now they're not having that big, huge payment hit like they would if they were starting out at 5 3/8%, like it says on the sheet.
Right. So the couple of things I just want to make sure for those of you who are watching with us, I just want to make sure that you are able to see at the current list price at $799 and the current rate, which is 5.25, this would be the total monthly payment, this $43.32.69. And then with the buy down, the price is the same, but when you work into the rate, which is 4.375, you are saving $338.26 per month. And this is your lower monthly payment.
And that's for the life of the loan. That's not the buy down part. That's just, it's a buy down when you're buying down the rate.
Okay.
There's also a way to have a lower rate when you start. But one of the most telling things here is if you look in that upper right-hand corner where it says price versus rate, seller would have to drop that price from $799 down to $722,430 for you to be able to get that same payment amount.
And I think when I first saw this, I said to myself, this is powerful when I am the listing agent, because we're now back at a point in the market, because the market is changing pace, where sometimes we do have to have that price reduction or price realignment conversation with the sellers. And it's so much easier to show this example to my seller and say, look at where you would have to reduce the price in order for the average buyer to consider your home. Because a lot of times agents tell sellers, a lot of buyers are priced out of the market. Well, traditionally, because of how fast our market moves, if you were to submit an offer of $722,430 on a house where the list price is $799, it more than likely it wouldn't be entertained.
Right. So what we call it is below market financing for a full priced offer. So the seller will subsidize your lower payment by paying a couple of points and still netting more on their house than if they were just going to drop the price.
Right.
Everybody wins.
Right. And that's exactly what we're still looking to achieve in this changing market. We're still looking to help our clients get win-wins. And a lot of sellers may think that they have missed the boat or missed their window of opportunity to sell at a high price. With this scenario, it shows that you have not missed the opportunities, and it shows the buyers that you can still compete in this competitive market, because some listings are still receiving multiple offers, but there are still opportunities where you can get seller paid closing costs and have a lower monthly mortgage payment. Because I know just from conversations that is what is causing a lot of buyers to pause. They want the lower monthly payment that they could have gotten back in January and February.
Oh, exactly. And it does take a little of the sting out. I mean, as in this example here, 3/8% versus 5.25. that is not a bad deal, especially when you're looking at, long-term costs. Maybe you're a first-time home buyer and you want to rent this out after a while,
Mhm.
how much money you'll save in the long run.
Right, absolutely. So I wanted to thank you for bringing this to my attention. The 2-1 buy down is not anything new. It's been around for a long time, but because the market has been so crazy the past couple of years, it hasn't been used. And now we're reintroducing this strategy back into the market and making our buyers aware of it.
It just makes for more opportunities to buy houses and in a very affordable way.
Absolutely. So what other options do you have up your sleeve? Because I know you have some.
Well, we have a lot of first-time homebuyer programs out there, and because of the rising interest rates, the Federal Home Loan Bank Board of Atlanta and the Virginia Housing have continued to increase the amount of funding they have for these first-time homebuyer programs, a lot of which have what they call down payment assistance.
Right. And we love first-time home buyers.
And
Woohoo!
give you money in the form of a grant that you don't have to pay back to help you buy a house. It's the best deal in the world.
Absolutely. And I love bringing this awareness to people because if we can show you how to use money that is already allocated for you so that you don't have to come out of your pocket when you are making your home purchase, then that's just a win. There's no shame in using down payment assistance programs. That's how I bought my first house. And the money is there. The money is earmarked for you. The funds are there. There is no reason why you should not want to at least apply to see if you are eligible and if you qualify for these programs. And if you are eligible, it puts you in a more competitive position because then when you make your offer with me, you're not asking the seller for the closing costs. You're still getting the closing costs.
Exactly. Look, if you are 6 months to a year out on buying a home, first of all, I would ask you to ask why you want to wait. But it doesn't matter whether you want to wait or not. But reach out to a mortgage professional. Reach out to me. Let me help you figure out what you really need, what you're looking for, so that we can strengthen your position when you are ready to go.
Right.
You have to do a full-blown loan application and 9 mountains of paperwork, but take the time to learn so
Right.
that you understand what your options are. Things may change a little bit, as they always do in our business, but reach out today. Don't wait.
Right.
Make sure.
Right. And even if you do decide to do a full-blown mortgage application, that does not commit you or obligate you to purchase. It just gives Eric the opportunity to say, okay, I got your information. Let me see what you're eligible for and what programs would be best suited for you. And it's just a conversation. I know a lot of times I think about the Psycho movie, the episode where he pulls back the shower and the woman goes, I feel like a lot of people feel that way when it comes to doing the mortgage application. It's like, I don't want my credit run, but it's just part of the information gathering process in the home buying process. It doesn't commit you, it doesn't obligate you, but it just helps us to show you what you're eligible for. And then with that information, you can decide if you want to buy now. You can decide what price range you want to stay in and where you want to look. So it still puts you in the driver's seat.
To sum it up, the last thing you want to be doing is hopping into a mortgage process or looking for a house and not having a mortgage, and then getting ready to buy a $400,000, $500,000, $600,000 house, and you go, "Oops, nobody told me about that."
Oh, I can't tell you how often I hear that from people who don't buy with me. Yes, it's not fun. It's not fun. And I don't want to make light of that situation because buying a house is a serious process and it's a stressful process. But we are in a very competitive market still. And once you do put pen to paper and make an offer, your deposit might be on the line. And we don't want people losing deposits. We don't want you spending money on home inspections and appraisals if we are not 100% sure that we can get you to the closing table. It's that simple.
Amen, girl.
So Eric, tell us, what is the best way for people to connect with you if they have questions and want to reach out?
Call me 703-929-3618 is
Awesome.
usually the best way to reach me. I work all the time, so you can get a hold of me up until about 9 o'clock at night. I do work evenings and weekends.
Absolutely. And I'm a witness to that because you have stayed up late working with me and my buyers, and I appreciate you. Thank you so much for joining me today. And for you guys watching on replay, we're going to be checking back into the comments section. So please feel free to drop your comments. And if you want to reach out to Eric directly, please feel free to do so. Thank you so much for joining us. And if you have any other questions or any other Facebook Lives at 12:05 that you'd like to see, please let us know. Thanks, everybody. Thank you, Eric.
Thank you.